Okay. Hi, John. You got in here early with your testing. How you doing, mate? Let's just make sure everything is up and running, and then I'll switch over to the camera. There we go. You now should be able to see me. Let me go ahead and ensure that you can. Yeah, there we go. Should still work fine. How's everyone doing? Can anyone hear me, see me? You know the drill. You know how we usually do it. Give me a thumbs up or some kind of indication that you can hear and see me. There you are, John. How you going, mate? Good morning or good afternoon, should I say? How you doing today? I have a run through, see a few people coming in through Trading View. How you going, guys? Welcome. Awesome, Santos. How you going, mate? Great to see you. Welcome to the live trading room, loud and clear and gorgeous. How good, John? Thank you, mate. Awesome, awesome. We'll give it a couple minutes. Let a few people flood in. I did a late announcement on the Discord today. Sorry, heads all over the shop, but we'll get people coming in, and then we'll start getting involved with what I want to chat about today. We're gonna have a review of two trades I took earlier in the week, and then we're gonna have a talk on NFP. NFP is obviously later today. Well, later today for me, tomorrow morning for anyone out the other side of the world. So we're gonna have a chat about it, and we're gonna kind of get to grips of what I'm expecting, what I'm expecting the charts to do, and then in turn, how can we profit from it? Now, don't usually like trading NFP, and I'm going to reiterate that fact the whole way through today. But I do want to have a chat about what I could potentially see unfolding, and then where we can actually place our bets from there. Hi, Carlos. Hello, hello. Welcome. Okay, lovely. Let's get stuck in, shall we? Let's waste no time. Let's get stuck in. People will flood in as the stream unfolds and the hour goes through. But the first thing I wanted to chat about was the two trades I took this week. I haven't traded very much this week, which seems to be a common theme over the past few weeks. Not really doing much risk on trading. Not necessarily because I don't see opportunity. It's mostly I've just taken a step back from implementing the trades that I wanted to implement and actually trading in that manner as well. So I've taken a bit of a step back from the charts a little bit, but I did take two opportunities, very small scalps, which I'm going to talk to you about today. So let's jump over to FX calendar. What were the two trades I took this week? They were both earlier in the week, Tuesday and Wednesday, were the trades that I took. And I shorted, shorted the Canadian GDP and shorted the Aussie dollar GDP. Okay, two short plays. And the reason I shorted these is because they were both pretty predictable that the GDP was going to drop. And in turn, with that dropping, that's negative for the currency. I've always spoke about it. You get a lot of people that code EAs, they code robots to react to these news. And they just buy and sell depending on what that figure is. If you can get a bias on what that figure is going to be, if you can forecast it, you can get in prior to those robots and then actually take the profits from those robots as well. You can allow them to push the price up, which is what I did. So first one was on Canadian dollar, and I paired it against the US dollar. The reason I paired it against the US dollar because there was going to be a lot of risk off in the US dollar, given that we had the consumer confidence coming out about an hour and a half later on. All right, so I wanted to sit back and be like, okay, that's gonna be coming out. There's not gonna be a whole lot of bias on the US dollar, so all the movement around this time on this pair is gonna be driven by the Canadian dollar. All right, it's gonna be more movement. I wasn't aiming for too much. I think I shot for about 13 pips. I think the whole move itself went for about 21 to 22 pips. But I'm going to show you that now. It was on the 31st for me. Here we go. What we were looking for is this long green candle here at 23.30, and as you can see here, Tuesday, May 31, 23.30. This is all programmed into Melbourne, Australian time, so if this isn't lining up with your time, it's okay. It's just because I've changed all the times to fit my time zone, okay? Now we come in, and the forecast was to be quite a large drop in the GDP. I second this vow, okay? I was like, okay, yeah, I believe that will happen. We're seeing kind of GDP drops massively across all currencies at the moment, right? And the reason that is everyone's battling inflation, everyone's raising interest rates. You know, there's a whole lot of global economic worry at the moment, which every currency is kind of seems to be going through, and you're seeing interest rates be hiked across the globe. You're seeing the inflation in the US. We spoke about it a lot last week about inflation and the effects of that and what causes it. I was expecting all of these GDP figures to pull right the way back in and to probably maintain pulling back in. Apart from the Aussie dollar, we did pull in a lot on the Aussie dollar. So we'll see the next figures. Obviously, it's every 3 months, every quarter. We'll see what the next figures prove to be. But for earlier in the week, I was definitely predicting a large pull-in. So Canadian GDP, we started at 0.9. The forecast was 0.5. I wasn't overly confident in the forecast that we were going to get there. This is the forecast from Forex Factory. But I was confident in a negative release, which is why I only shot for about 13 pips. Because I was not expecting a major drop in the GDP. Just quite a normal, you know, nothing substantial. So as we moved over to the chart, I placed my bets early. I placed it at the close of this candle here. This is the 5-minute chart. And what I did was place my buy order, and I had a take profit at 13 pips and my stop loss at 20 pips. So I had a negative risk to reward on this trade. I could actually set it up exactly how I did it on the close of that one. And this was 20 pips and this was 13 pips. This is how the trade's set up. As you can see, we did hit it within the first 5 minutes, which was a positive thing. I wanted that to happen. I wanted to catch the original bot move. And we actually did a pretty good job of getting out where we did. We could have caught a little bit more, you know, we could have kept going and got about 18, but the chances of picking that top are pretty slim. And I was quite happy with how that trade played out. Why did I go negative risk to reward ratio? The reason is confidence level. So usually I would aim for a 1-to-1 risk to reward ratio when trading economic news. If I'm really confident in the economic data, I'll aim for a 2-to-1. But when my confidence drops a little bit, I do bring in the risk to reward ratio to bank those profits early off the initial EA buying impulse. I like to bank those profits early, which is why I aimed for a little less. And I did a very similar thing on Aussie dollar, which was the following morning. For me, 11:30 being based here in Australia, it was quite easy to judge that the GDP was not going to hold a 3.6%. Going to pull right the way in. The forecast was 0.6, didn't get that low, it got to 0.8, but regardless, it's still negative and still not good. Good data for the currency. So we did see a little bit of a sell-off. Held this position for a lot longer, which I tend to do with the Asian pairs when trading news. Takes a little while for the market to fully react. When you get some news come out in the Asian session, you don't have as much volatility, don't have as many people watching it and reacting to it as you do in the US session or the European session. So we do get the initial impulse, but then it also kind of drags for a little bit. And that is exactly what happened here. This candle here is the 11:30 candle, which is when the news come out. Same statistic, right? I went in, this time I went at 200 and or 20 and a 20 pip stop loss and take profit. And I did hold on till the end here. However, once we started moving in and price was sitting around here, what I did was pull my stop in just above these levels here, enough so spreads wouldn't stop me out. Held it through. When we got back up to break even, I halved my position. I took off half the position just to be safe in case we were going to carry on up to the stop loss. Took off half the risk, and then it turned around and come up and hit. So even though we did get all the way down here, realistically, the risk to reward ratio was about 0.5 of what I was aiming for because I did take off half the position. But that was a risk management technique, which I wanted to endure. The reason being, if it does have that impulse move and then pulls back to where we started, a lot of the time it can carry on to hit the stop loss. So I wanted to half the position there, and kind of hold on from running that any further than it needed to go. Those were the only 2 trades I had this week. Very quiet week. What I am going to do today is run through some technical analysis, which has been a while since I've done. Maybe even see some trade ideas to put up on the TradingView account. But I am very open. So what I'm actually going to be doing is welcoming any questions, any conversations that any of you want to start or have, and then any analytical points, including I now can have a look at indices and stuff, because we now introduced indices into our instant funding accounts. So we are going to be able to do a bit more analysis on that. And I see a fair few people are looking at hopefully bringing in some cryptocurrencies soon, but we'll see how far that gets. I can't really say much on that because I'm not overly confident in whether or not that's going to go ahead. Have you all fixed the dashboard for Freestyle? We have not yet. So we've got an issue coming from MetaQuotes. It's not directly located to us. So it's kind of a chain at the moment of we need someone to fix something so then we can fix something, and it's a back and forth process. We're trying hard. We're trying to get that done as soon as possible. But unfortunately at the moment, the dashboard for the Freestyle is undergoing some errors. Apologies for that. The team's doing all they can to get that fixed as quickly as possible, and hopefully we can get it back up pretty soon. But for now, that you can still trade, you can still use your MT5 and everything about that. But yeah, it's gonna be, I'm not sure when it's gonna be back up, but I'd assume it'll be back up within the next 12 hours or so. Hopefully before market close over the weekend. If not, it's not that big of a deal and we can get it done on Sunday. So well, no one's going to be trading over the weekend anyway because all the markets are closed. So. Hi Horman, welcome. Good to see you again. Would love to hear about trading indices is different than Forex, about how trading indices is different than Forex. I've never tried it. Technical standpoint's very, very similar. Trading indices and trading Forex, you can kind of, once you know technical analysis, you can kind of do it like as a, what am I trying to say? Once you know technical analysis, it can kind of relate to most industries, right? I find it can be easier to trade something like the S&P 500 if you're using a fundamental bias. Now, the beauty in trading equities and trading indices and everything along those lines is there's only one thing you really have to look at, right? The overall market. There's only one stock. If you're trading a stock, there's only one stock and one earnings report you need to look at. Whereas in Forex, because we trade 2 assets paired, 2 currencies or 2 assets paired against each other, we have to analyze both assets and we have to understand the weaker one and the stronger one and then trade like that. Whereas when you trade indices or when you trade stocks, it's a lot easier to just concentrate on that one asset. But then you also have that extra element of risk during financial crises, during recessions, you know, all these type of market down periods. You're very liable and there's not much heading up, or you'd have to only make money shorting if you're actually able to short your trading CFDs or whatever it is. So it has a couple of different elements. I always like FX because I like the fact that we can hedge against another currency. The 2 assets paired against each other brings a range of stability into trading Forex, and we kind of, and you'll see that the price moves we get are nothing in compared to what you see in the stock market or what you see in the indice market, because having those 2 kind of pegged against each other and they fluctuate, one has good news and the other has good news, we kind of get a lot of ranges, we get an area, which is why we require larger accounts and more leverage to actually make money from the smaller moves. But it does have that whole range of stability, where trading indices, that stability isn't quite there as much as you're not really paired against another asset. The good thing about indices is it's a group of a lot of large companies, right? So So there is kind of an average. Having one company kind of shit the bed won't affect too much as just trading that one equity. But there is that element of it's not really paired against anything. So you've got to be aware of that, and any bad news or any good news will remarkably affect it. However, it is good to get in early because when you do get these good or bad things, it tends to trend for a little bit. I've found trading indices. The volatility in indices is very fun. I used to trade the DAX, the German 30, right on the open. The volatility is fantastic to kind of pick those early moves, and it will just kind of trend throughout the rest of the day. And you can see here, even on the S&P, is sometimes we get some early moves and it just trends for the rest of the day as well. But you'll have to keep an eye on news, keep an eye on which which parts of the S&P 500 are doing really well. Are technology stocks on the way down at the moment? We're hearing a lot about tech stocks. Oil's on its way back up. All this kind of falls into play as well. Which companies are focused in that, and then which companies are in the actual indices as well. Sorry, I missed a couple questions there. Do you think Aussie dollar, US dollar continue to go up as strong as it did? Hi, Stephanie. How you going, Stephanie? It's good to see you. It's good to see you. Aussie dollar, US dollar continue its move. Will it continue its move? This is an interesting, right? Because why have we all of a sudden started moving up? Now, I've said this the past couple times we've had a look at the Aussie dollar. We've looked pretty good. As a currency a whole, the retail sales, the employment rate, everything, we're doing pretty well as a economy, right? We're moving pretty strong. However, we had this, we were kind of stumped, and a lot of people were struggling to figure out why we're getting stumped when we're doing so well kind of economically. Now, when I say doing well, I mean, okay, okay, I'm still going to explain this anyway. This was all due to China's lockdown. We're heavily reliant with China. We mine all the resources, we send them to China. China manufactures everything and then sends everything back. That's kind of our trade agreement. And being so heavily reliant on China when they go into COVID lockdowns, really strict ones, which they've just gone in, it can have a massive play on our trade deals and the shipping and how quickly we can get contracts sorted and money and everything like that. Shanghai's coming out of lockdown, coming out of a 2-month really strong lockdown. Things are starting to open up again in China, which is why the Aussie dollar is starting to react and starting to go back to the way it probably should be. So I do think this will continue into the near future, but we'll keep an eye on that. You meant, however, after the news event. Why do you think Aussie dollar continued to go up as strong as it did after the news event? Okay, let's get back to the event itself in here. So this is where the news event was. Okay. So what are you talking about? This move to the upside here? Yes, Horman. Shorting is essentially the same. If you're trading CFDs, shorting is essentially the same. You just press sell, and you can play the downside too. All depends on the market you're trading, but yeah. Especially here at the 5ers, yeah, it's the same. But Carlos, what do you mean exactly? Are you talking about this little push up? Or are you talking about the push up like through here? Where are we talking about? No problem. Good to see you again. I still need to reply to your message. Sorry, I've been shocking at replying to you, Horman, recently. I apologize for that. I've just been under the pump. A lot of different things, a lot of different moving parts, both in work and out of work. So I've just been, everything's been a bit all over the shop. So I will get back to you. I'll get back to you today, actually. I'll make a note of it and I'll get back to you today. And I want this week's report too. But yeah, Carlos, can you explain a little bit about the continuing push upwards the entire way? Sorry, so are you? I think you're talking about here because I shorted it here, right? This was the news event, and then I shorted at the start of this, and then we moved all the way down, and I got out down here. Well, it wasn't right there. I think it was up here where I got out, and then we kind of had to push, break higher, and then retest. You know, break higher, retest, and a push higher. But that was hours after economics read into the GDP, and then after the GDP. We had a lot of manufacturing PMI and stuff for the US dollar. So this would have been a lot of people essentially placing their bets for what that is going to end up being. As you can see with the manufacturing PMI, they were expecting a little bit of a slow, which is negative for the US dollar. So a lot of people were buying the Aussie dollar, hedging it against the US dollar early on. And then what they actually found was there was an increase in the manufacturing PMI. So it actually went up. So we had a shock announcement come out, and then everyone got stumped getting out of their positions in which they got in earlier. So all of this move here, in my opinion, was more correlated to the manufacturing PMI of the US dollar rather than the actual Aussie dollar GDP itself. I feel like the Aussie dollar GDP kind of resolved itself all within the Asian session here. And then when we moved out, everyone started placing their bets for that larger expected movement later on in the day. That's my opinion. Might be wrong, might be right. Who knows? That's just what I've noticed over time trading, and that's how I think. That's how I think that went down anyway. I hope that that made sense. If it didn't, please ask. Please mention. How you doing, Stephanie? It's good to see you again. Thank you for tuning in. How's trading been? I'm gonna go have a look here. We're gonna do some analysis. It's been a while since on stream we've kind of dove through some charts and done some analysis. So, well, I spoke a couple weeks ago. I wasn't really able to punctually speak at the time. My head wasn't working. About the correlation between indices and FX pairs. There is a correlation. You know, when indices are not doing too hot, the currency of that indice tends to do a little bit better as they sell the stock for the currency, and vice versa. When the stocks are doing really well for a currency, really well for an economy, the currency of that economy tends to pull back in as everyone exchanges their money for stocks. So that is a correlation effect which you can start analyzing on a better level now that you have live market data from us on your MT5 platform, which is going to be good to look at and good to kind of place, you know, just maybe some extra confidence. It's not something you want to use as a sole indicator to buy or sell, but it is kind of something to align yourself with and understand whether or not it is the right decision or whether or not you're wasting your time. You figured I just didn't think it would happen so early. Yeah, well, when you get kind of a good bias, a lot of people, especially with US dollar big announcements, the manufacturing PMI is pretty large for the US dollar. A lot of the hedge funds, a lot of the big firms, they like to slowly get into their positions throughout the day. So rather than just buying, you know, like we do with small positions, when I say small positions, like anything up to realistically a $300,000 position, $400,000 position is considered quite a small position. Big firms, when they're getting in with like a $20 to $30 million position, they like to slowly compound it and build it up into different prices. And you would have seen, even though the news was negative, and if I head back over here on the Aussie dollar and show you what I'm talking about, even though the news was negative for the manufacturing PMI, as they bought in throughout here, kind of pushing the price up, price up, price up, price up, they got the data released, they could have reacted quick enough to the point they get out still in profit. And that's what a lot of the big hedge funds and smart money do, is they build their positions early enough, knowing that it's going to push the price, and then they react right at the beginning, which is why I talk about... which is why I talk so much recently about how sometimes if news is so expected and so obvious that it will do the complete opposite of what you expect it to do, because you're going to witness a lot of profit taking. In this circumstance, it wasn't. I thought they were going to expect a positive release, a little bit of a push up, and then, to be honest, probably a push down from everyone taking the profits here. But because it was a shock release, everyone was expecting negative data, and it actually produced positive data. This thing shot like an absolute truck. And you would have seen pretty much all of these positions that were built up over time try to get out at this one price, which is why it was pushed down so heavily so quickly. So yeah, that's why a lot of the time you will see prior moves, especially to you'll see it tonight with NFP, I'm sure. You will see a prior move, and you may be able to actually find the points on where the big money's getting in, and that can give you a bias itself on where do people think this is realistically gonna head. Where do you think this price is gonna go? So keep an eye on throughout the afternoon today. My afternoon, your whatever it might be, maybe your morning. And prior to the NFP data coming out, maybe about, I don't know, 30 minutes to the NFP coming out, have a look at the chart. You may see a couple little indications on which way they think the price is going to go, or whether or not it's going to be a profit-taking event. NFP is pretty crazy, though. Do not recommend trading it. Hi, Steve. Welcome. How you doing? You'll find that the Aussie dollar correlates with the indices, the S&P 500 and the Nasdaq. Yeah, it does, especially with the with all the mining companies too. The Aussie dollar does move a lot. But yeah, when we see correlation like that, we can have extended bias on what we're analyzing and which way we think it's going to go by getting movements in the stock market. If we get the S&P 500 start rallying, you may see actually a decline in the US dollar, and vice versa. If the S&P is getting stumped, you may see an increase in the US dollar. Now, I say may because it doesn't always happen, but a lot of the time they do correlate quite nice. And recently, over the past, I want to say 6 to 7 months, they have correlated pretty well. Trading's been up and down, been shaken out of a few trades than normal, but altogether good. Managing my risk has been a saving grace. Yeah, it is. I love managing risk. I think it's why I love trading. It's not so much the profits or being right in analysis. It's the managing the risk at the time. It's, kind of having an open position, being live on the market and making the executive decisions as by a plan and reacting quickly to limit your overall risk and exposure and to manage that live. I do love that. I think that's my favorite part of trading, if I'm completely honest. So it's good to hear that you have been managing your risk so well and so preemptively. It's an outstanding thing to be able to do, and it's by far my favorite thing to do. 100% manage risk, and I think it should be most people's, especially when they come to trade for a firm. Managing risk is like our highlight thing. All our courses, all of our live trading rooms, we speak all the time: manage your risk, manage your risk, manage your risk. And it is great to hear that you're doing that so well. I wanted to have a quick chat about NFP. NFP's later today, right? What are we looking at? Maybe 13 to 14 hours away. That's a quick estimate. Maybe longer. Actually, probably much longer. Maybe 15 hours away. NFP is going to come out. Non-farm employment change. What are we expecting? Where do we think it's going? Is the unemployment rate going to come in? Are more people being employed? Or is the employment rate going to blow out again or stay the same? How's the market going to react to that? The forecast for it is for to pull in. Yeah, the forecast is for the market to pull the unemployment rate to pull in, which is going to be good for the US dollar. So keep an eye on movements in the US dollar, because what you may find is while there'll be 1 million robots and 4 million retail traders buying on that data release and just reacting to whatever happens and whatever the number is, there will be a lot of smart money in the positions prior to the announcement, and they may be getting out during the announcement, which will send a lot of fluctuation and a lot of profit taking. If we have a look at the US dollar as a whole, and for an example, I'm going to go with the US dollar Japanese yen, we can kind of get an idea of where this has been going for the past couple of days. This movement in here, yes, we can pin it on other things. Good manufacturing, PMI, Japanese yen still not looking overly attractive in the world of investing. However, Is this slowly big money building some position prior to NFP? Are they hedging their bets in there? So no matter what the NFP data is, all of that volatility that's going to come when this comes out, all of those millions and millions and millions of orders that are going to be fluctuated into the market at that exact minute provides a hell of a lot of liquidity for big firms, for big money to exit their complete position. Why is that easy? Well, if you've got 4 million people buying the US dollar within 1 minute, that is 4 million different orders of different sizes that will buy your asset that you're selling. So you may see this as the initial climb or maybe the initial move, expecting good data for the US dollar. We might get that good little pump up to move maybe about 30 to 40 pips. And then you may see someone up there go ahead and hit their sell position. So if we do get good data, and keep an eye on this, don't trade it, but keep an eye on this. If we do get good data for the NFP, okay, you may see an initial pump up of everyone buying into that. Then watch how the candle flows on the 1 minute chart. Watch how the candle flows. If you see a nice pump up and then some massive drops down, leaving some long wicks, that right there is big positions exiting. Okay, they can hit the little sell button and they can liquidate their 10, 20, 30, 40 million dollar position in a matter of a minute or in a matter of seconds, because that volatility and that volume is in the market at that given time. So keep an eye on that. Keep an eye on how that reacts. And when you start to learn how they think about this and how they use these liquidity events to liquidate or get in positions, you'll be able to start to better react to trading fundamentals and know which events they're actually using for liquidity and which events that are actually just based pure off of the little EAs, which I like to trade and make money off those little EAs. So there's a little hint from me. There's a little tip that I've learned over the years. Keep an eye on that, and I'm excited to see what you guys think and what you guys pick from it. Come back next week or even message in the Discord and tell me what you noticed. Tell me what you think happened. Run your analysis of the event. Where was the real money? Was it in prior to the event? Was it in after the event? Were they in the event? I'm interested to see where your mind goes. Have a think from a different angle other than a technical point for a little bit. Okay, sorry, Steve. I've been trading futures for a number of years, and after spending numerous years trading Forex, many teams in Forex, buyers, sellers, and the broker. Too many teams in Forex? You mean like too many people trading it? What do you mean by that? Too many teams? Aussie dollar, Japanese yen short? What are you thinking, Paul? Why are you thinking an Aussie dollar, Japanese yen short? You're thinking an Aussie dollar, Japanese yen short because it's massively overbought, correct? Just because it's overbought does not mean it is going to drop down. I can tell you that with a bit of confidence. Japanese yen has continued its nice weak trend. China's opening up from its lockdowns. A lot of people are getting into the Aussie dollar. A lot of the government has changed, and the new government's just been announced in Australia, which is obviously proving to be a good thing, apparently. We'll see how long that lasts. Just because, I'll reiterate again, just because we've already had a large movement in one direction does not mean we're going to reach a top and we can easily short it, okay? You have to pick the top, which is the hardest part in trading. And then not only pick the top, you have to assume that that top is going to hold the whole way through as well. Don't recommend it. If an asset is moving as strongly as this, there's a reason. If an asset is moving, and this is on the 4 hour, right? If the move is happening as strong as this, there is bigger hands at play than just being an overbought market. There is some strength behind this move. There is some reasoning behind this move. Whatever that reasoning is, figure it out. Why are so many people buying the Aussie dollar? Why are so many people shorting the Japanese yen? If you short this pair, you're buying into the Japanese yen. Is that a good investment at this point in time? I know my answer, but I want you to do the analysis. I want you to figure out, why do you want to short? Why do you want to buy the Japanese yen right now? What part of the Japanese yen makes you think this is a good idea? Okay. And I think that's what a lot of people forget to do. They just look at it technically and go, oh yeah, no, the RSI is overbought. We're way outside of the Bollinger Bands. It's gone this far. It surely can't go any further. that right now, I would never base an investment off of that, right? And you have to be willing to fully understand and be confident in your position. And right now, I'm not overly confident in a position in the Japanese yen. But that's just me personally. You did ask for my analysis. There's my analysis. But it's always important to have another look or have another idea about a trade. You know, have some reasoning behind the trade. Explain the trade. Why do you want to short the Aussie dollar during a good time? Why do you want to buy the Japanese yen when it's really weak? Maybe value pricing. Maybe I'm wrong. Maybe you've got the top right here and it's going to work out. Maybe it could. It could. But I'd like some reasoning behind it. Because if you get a move like this, there's a reason the move like that happened. We know what happened last time we had a move like this, right? We had like a move like this, we kind of slowed down. We might be approaching that now. What happened? It just kept going and kept going and kept going. And then we had a pullback. Well, everyone cheered, woo. And then it went back up and broke another high. So if there's real moves like this, the real powerful moves, there's probably something behind it. So just do a little bit more investigating before you just go ahead and do your technical play. But if your technical play works for you statistically, go ahead. But that's my analysis. Classifying the buyers as one team and the sellers as another team as I like to join the strongest team. Understandable. It's very easy to see which the strongest team is, as you can have a look at the chart and that's what it tells you. But no, I do understand. You want to figure out the sentiment, essentially. Where's the sentiment? I like to do my sentiment fundamentally. I like to have a look at every currency and be like, okay, where's their interest rates at? Where's their inflation at? Where's their retail sales, their manufacturing, their services? What's the strongest market? In Aussie dollar, we like retail sales. We like the services PMIs because a lot of our money and jobs is created in services. So if we're getting a drop in employment in the service sector, there's a good chance we're going to have a drop in employment altogether. So you can get little hints, you can get little ideas. I like to build sentiment that way and then figure out whether I want to buy or short. I didn't even know TradingView had this live feature. Actually, this is really cool. Keep doing your thing. Thank you very much. Yeah, no, it is a good little one. I've also restreaming over to YouTube as well. So I'm live on YouTube at the moment too. But yeah, it is good. It is good. We do these every Friday. So at this time every week, Abe. So if you want to come in and say good day at any point over the next couple of weeks, I'm here every week, consistently. I also do all the TradeView ideas as well, which you may have seen. Maybe that's what got you over to this live stream, the little trade ideas that I put up. They're getting a fair bit of traction recently, which is nice to see. But yeah, that's my analysis on the Aussie dollar Japanese yen there, Paul. I hope that helps in some way or other. You currently have a sell position open on US dollar CAD. It's in profit. Should stop loss be tighter because of NFP? Very good question, Will. That right there tells me that we've got a hole somewhere. Will, what that tells me is we've got a hole in your risk management plan. What I want you to do is dive in on your trading plan, okay? I don't know if you ever had access to the 5%ers trading plan. I think you can get this digitally now. I saw an email on it. I'm pretty sure we've allowed you now to digitally download the trading plan if you're a 5%ers trader. Get in that, and in here, there is a trading plan sector. I'll see if I can find it for you just quickly. You build your strategy, you understand all of your strategy. Here you go. And then there is a page in this book that looks something like this. Okay, I know that's going to be probably inverted, and I'm not very good at holding it in the camera. But what you do is you analyze different scenarios. You preemptively analyze scenarios, and then you make a plan for what you're going to do in each of those scenarios. Now, having the news event, a big news event coming soon in one of your trades, will be one of those scenarios you want to have a talk about. And when you talk about that scenario and you start structuring your plan, you essentially just look through what should I have done in the past, okay? And what you can do is when you start getting these questions in your head, Will, of damn, NFP's coming up soon. Should I bank my profits? Should I, reduce my risk? Yes, my answer is yes. You should. What you need to be able to do is analyze what's the best process for doing that. Okay, so as we got, you're in a short position, the short position is looking pretty hot. Once again, it's the same as Aussie dollar, US dollar. We're getting negative moves in the US dollar because we're expecting negative data. Is this a larger firms at play? Potentially. So are we going to get a push down on the negative data, but then instantly kind of whoop, as everyone takes all the profits from this entire move? It could happen. Okay, it definitely could happen. So keep an eye on that. But yeah, if look, I don't know what your trading strategy is. I don't know how far in profits you are. I don't know what your analysis is. I don't know what time frame you're trading. NFP moves the chart a fair bit, probably the most out of everything. Only really do you get hiked interest rates that really move the market, but NFP is right the way up there for moving the market. So you are going to see a massive increase of volatility, and it's not going to care for technical analysis, right? It's all going to care about what the unemployment rate is in the US. So I definitely recommend, Will, either moving your stop loss a little bit tighter, taking off half the position, taking off 75% of the position, maybe even take off all the position, reassess after NFP. If the analysis is still the same, re-answer the position. You can kind of run through different ways like that. You can have a look to hedge. So you can kind of freeze your P&L at a certain level if you wanted to do that, but that is very risky given such a high volatility event and spreads. So yeah, as a whole, yes, have a look at reducing your risk moving into this event, but whether or not how you go about that is very, very up to you. Thank you so much for the advice, new to the 5ers. Welcome to the 5ers. It's an absolute pleasure and privilege. Oh, wow, I couldn't speak there. It's an absolute pleasure and privilege to meet you and to have you involved in our firm. It is really good, and the community is great. So if you haven't already, get over on the Discord, go say good day, introduce yourself, and you will see many people that are in this chat as well. Go over and say hi to you too, but welcome. Which account are you undergoing, Will? How long have you been trading for? Does anyone else have anything they want to run through? Any analytical points they want to talk about? Something you're proud of? Now's your time to boat. I'm going to give you a pat on the back. Don't worry. I'm not going to be worried if you're going ahead and boating. Now's the place to do it. Give me a reward. I'll give you your reward. I will give you a pat on the back and I'll employ you. Or I'll give you some advice and some things that maybe you didn't do too well. And then it's a win-win situation because we all would walk away either learning something or have gratitude. You know what I mean? You're on the bootcamp challenge. Awesome. It's a good one. It's a good one if you're new to prop firm trading, the bootcamp. Low entry fee and kind of get used to what it's like trading for a firm. A lot of people do come from other firms to ours, and there is a large difference between that because we actually run like a hedge fund. So we do need our traders to make money. So we actually make money. So yeah, there is I guess a little bit more pressure in terms of that. Is we expect our traders to make returns because that's what we're here for. But we'll also do everything we can to help you make those returns. So on and off for 5 years, ups and downs. Yeah, that's trading, right? We have ups and downs all the time. But it's great. It's great you're here. If you get onto a live instant funded account or a freestyle account, feel free to reach out and do a one-on-one portfolio analyst if you feel the need. We have a whole range of senior analyst teams, including me, which we can sit down for half an hour and have a chat about your trading and different areas you can improve. So if you are a instant funded trader or a freestyle trader and that does interest you, or you're thinking about coming to the 5%ers, do keep that in mind. We can have a sit down one-on-one for half an hour and have a talk about your trading and different areas you can improve, which it's a great asset to have. You're taking your time to work on your risk management. Outstanding. Absolutely outstanding. That is fantastic and really good to hear. That's all you got to do. Focus on not losing and profits will come. I don't know how many times I've reiterated this fact. Is when the moment you stop losing money, you subsequently somehow start making money. Okay, if you focus on only taking the really good setups and you focus on managing your risk accordingly, the profit will come. So many people focus on the profit because they so badly want that $1 million, and they constantly focus on hitting the profit target. And every trade, they're always focusing on target, profit, profit. That they ignore the downside, and they just assume the downside can't happen. And the downside always happens in those circumstances. So when you start analyzing realistically, how can I manage my positions better? How can I reduce my risk overall? How can I, get the most profit out of reducing my risk? You actually start making a lot more and become more consistent as well. We've noticed that a lot with our traders. The moment they focus more on not losing money and just sustaining, profits just flow in, and then something switches in their heads and they go, oh my, that's all I had to do. I just had to focus on not losing. And yeah, because so many people are so fixated on making money, which is what we're here for. We're here to make money. I understand it. But we need to focus on the process, not focus on making money. And that happens a lot. Does anyone else have any other questions or anything they want to run through? Because we're approaching deadline, really. It's been quite a quick one and quite a relaxed. John, here you are. If your account stays at opening balance, you'll be trading a long time. You'll figure out how to make profits somewhere along the way. Exactly. If you manage to keep a break-even trader for like 6 months and stay break-even, it'll take one tiny little adjustment, and the analyst team at our firm will know how to make that adjustment. It'll take that tiny little adjustment and you'll end up being a highly profitable trader. But if you can maintain being a break-even trader for 6 months of trading, and I don't mean not trading and just having your balance there, in the market, risk on, everything like that, you will see a good increase in everything, in consistency, in profit margins, in outlook, in decision making. Everything will just be clearer and crisper. Hi, Steve. Yes, I am. I am in Melbourne. I live in Melbourne. That is me. I sure am. Are you Steve? I'm assuming with the -AU that you are somewhere around Australia. It's a good guess to choose Melbourne. Did I mention Melbourne, or is that just a lucky guess? I may have mentioned it. Oh, it's brisk if you are in Melbourne. It's cold, isn't it? Been a bit cold recently, but yeah, John, definitely right. 100% agree with you there. 100% agree with you. Consistency is the main thing. Profits will come later. Risk management, consistency, profit. It results in profit. Oh, it is cold. It is cold. Since mentioning it, I've realized that now I've gotten very cold. I have to put the heater on, I think. Consistency can be very difficult to maintain, Will. Very difficult. It's hard. Definitely is hard, but whoever said trading was easy? We come into this industry, we come into this job because we want to reach financial freedom, we want to reach time freedom, we want to reach our goals on whatever that is. That's never going to be easy. It's never going to be an easy job. And finding consistency, you have to be consistent within yourself, your process, your discipline, your patience. You have to be consistent in yourself, your own strategy. Be consistent in trading that one strategy. It is very difficult to maintain, but it is what needs to be done. If you're consistent within yourself, you're consistent in your strategy, you're consistent in your decision making, you're consistent in your times that you're trading, everything like that, you will see consistency come back and shown on your even if it's negative trading. If it's consistent, you just need one person to just change a little thing, and you'll notice you'll start moving in the right direction. Because so many people, they fail to maintain consistency. They're not consistent. They'll strategy jump, or they'll move, or whatever it is, and yeah, it just won't get to that level they want to, because they're never being consistent within themselves. Golden Beach, oh, very lovely. Yeah, 90 Mile Beach, I know the one. Oh, lovely, lovely. Oh, well, I can imagine it's pretty chilly down there with the coastal breeze, no? Yeah, I'm closer to the city than that, but yeah, no, I am based in Melbourne. Yes, sir. All right, guys, I think that's gonna do us for time. So if no one has any other questions, I think we usually know how we're going to do this by now. I'm going to wish you all the best over the weekend to get away from the charts. Go spend some time with your friends. Go spend some time with your family. Get out of the house. Get out of the office. Go mentally reset, let your shoulders drop a little bit, and then come back on Monday and or Sunday, depending on where you are in the world, and get ready for a fantastic week of trading. If you need me at any point throughout the week, I'm in the Discord. If I'm not in the Discord, I'm on the TradingView account, okay? Reach out at any point if you want to have a chat or you want to ask some questions. I will be live again this time next week, so keep an eye on that. And then also hopefully putting out some TradingView ideas early next week as well. So, as always, enjoy your weekend. I wish you all the best in the trading week ahead. Be careful with NFP tonight, but keep an eye on it and have a read of the data on what's happening and see if you can notice where the good money is in the market and whether they're in the market prior to everything unfolding. It's been an absolute pleasure. I really can't say that. It's been an absolute pleasure and privilege today, guys. Have a fantastic weekend, and I will see you next week. Cheers.